here back into what's very interesting is that the indicators are saying down, and the market actually, the indicators, excuse me, are saying up, and the market actually went down. So if we take that reverse analogy back here, then because we have a full week, a week and a half of such low volume for the indicators to really calculate what's going on in the market, this suggests that if we can hold above this trend line down around this 101 level, then we should at least retest the 105 on US CAD. When we come into the British pound US dollar, again, we are closing the year exactly where we started, at just around this 156.10 area, completely flat with a downward bias. Now, the only thing that concerns me looking back into the beginning of 2011, even with that dollar strength, the pound still managed to make most of its gains between January and May. And so looking at this, we have again, and this signal, to further point out to everybody, was dead accurate. And you can see the predicted MACD, predicted TSI, the triple cross, everything went up. This suggests that buying the pound dollar may not be a bad idea, depending on if we can break this trendline resistance that I've drawn in here around this 159 level. If we can get through this 159, the pound dollar could be looking at making a run for the first part of 2012. But again, it's going to have to fight some potentially very strong. It's going to have to potentially fight a very strong US dollar and a stronger US economy versus a weaker UK economy. So we'll see how it plays out, but we'll keep an eye on it. Right now, we know where the resistance is. So if we can clear that, I think we're going to have a lot of sellers coming out in 2012 around the 159 level. Euro US, you can see that I have no trend lines drawn on this. This one here is going to be another volatile pair for 2012. We can see that in the 2011 calendar year, it primarily stayed above where it finished the year, right around the 133.85 area. However, we've closed below this level. Now we can see here back into the beginning part of 2011 a very similar situation. We closed at 133.80, I believe, in 2010. But then we continue to move even lower towards down around the 125 area, I believe, or even lower before we got that big bounce. So this suggests that we are going to see further downward pressure on the euro, particularly the euro US, to start the calendar year. So I would be looking, if I was going to draw a trend line in, it would definitely come in without, just on its own, probably look to sell around that 133, 134 area, right along that horizontal line. Question whether we can get that high, but it's certainly possible. Dollar yen is an interesting one too. You can see that I have this trend line resistance drawn across here, and we have closed the year right on it. And where we closed last year, we closed up around just over the 81 level. So this is dollar yen has had basically a pretty bearish year, from the close. But the thing I want to point out with dollar yen is the majority of the gains that were made on the US Japan currency were made between January and approximately May. It peaked out in May around the 85. So you can see, looking at those seasonal patterns, we would anticipate yen weakness at the beginning of the year and dollar strength. So this is why with my own clients I've talked repeatedly, be patient, stay long dollar yen, and if we follow these seasonal patterns, we should see yen weakness right across the board. But that's a risk, still a risk on, risk off trade, and we have to see how it plays out. But looking at these patterns, that's what makes the dollar yen very attractive to me. Anywhere between 76 and 78, very attractive longs to me. Coming into our final pair, looking at one of our final pairs, excuse me, would be the US Swiss franc. We've managed to close out the year right where again, you can see the pattern. We've closed out exactly where we were at the end of 2010. Now, what you can see also is that the dollar has had predominant strength against the Swiss franc, very much like the yen, in the first 3 to 4 months of the new calendar year. This looks good for a potential move higher. on the U.S. Swiss franc, and again points towards seasonal dollar strength in the first quarter, maybe the second half of the year, before the dollar starts to taper off. So for now, I would like to see us hold above the 93 level, 92.50 at the worst case volatility. And I would like to see it move up towards 95 again, 96, have a nice pullback again towards the 94 level, and then make a bigger run higher. Now, I'm not sure that's the way it's going to play out, but that's the way I would look at it. And again, this 93 level certainly comes in as a point of interest to me. The New Zealand dollar, again, I think we've already pretty much discussed what's going on with that. It's very similar to the Aussie. This 79 level is going to be a key level. Now, depending on how things play out, we've had another earthquake in New Zealand, which could change things, and that's the only reason I have it up here again, is just to warn everybody that this Christchurch area around New Zealand has been again hit with an earthquake. There's issues here which could strengthen or weaken the currency. So. But at any rate, that is the Forex weekly outlook for the week of December the 26th, with a different twist on things this week as to what we're potentially looking at, a review of the 2011 calendar year. And again, I look forward to talking to everybody in the new year. Thank you.